Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to show you how to always get paid when trading options. Now, if you guys are new to options trading, then options trading is one avenue that could allow you to make consistent income. In today's video, I'm going to show you a step-by-step walkthrough of how this can be done by myself and most importantly, by you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, it's a very important video. I'm going to show you how to always get paid when trading options. We're going to run through several different option strategies. So whether you're trading with a big account portfolio or you have a small account portfolio, just a couple $100, I will show you option strategies that's going to get you paid. So, without further ado, you guys know how we do it. Let's go ahead and get down and dirty with options. So, the stock for today is going to be none other than SoFi Technologies, and that ticker is going to be SOFI. Let's go ahead and go to trade SoFi options in order for us to open up our option chain. Now that we have our option chain here, before we go ahead into the first option strategy, I do have two requirements for my viewers and also my subscribers. Quite simple requirements. The first one is going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy. That way, if the trade decides to go against you, then you know how to get out of the trade. Now, let's go ahead and get it. So, SoFi strategy number one, in order for you to get paid, the highlight of this video is to get you paid. So, we're going to go to sell, we're going to go to put, we're going to choose our strike date. The strike date we're going to be choosing is going to be July 11th. That gives you 20 days to expiration. Now we're going to go ahead and we're going to go below the share price and we're going to go with our $14 strike price. We're going to go ahead and select that. Now, this first option strategy, you're going to get paid. The amount you're going to get paid is going to be $28. This first option strategy is known as the cash secured put. In order for you to do the cash secured put, you're going to need to leave a collateral. The collateral you're going to need to leave is going to be $14 multiplied by 100 shares. So you need to have at least $1,400 in your portfolio. For those of you that have account value of just a couple $100, stay tuned. I do have strategies for you that allow you to get paid as well. So the amount you're going to be receiving for this cash secured put is going to be $28. Now I know $28 does not look like a lot of money. However, what I like to focus on this channel is your percentage return. If you were to divide $28 by your $1,400 that you left as collateral, you would be getting a return of, let's say, 2%. Now, a 2% return in just a couple of weeks, that's a very high return. It's also a very conservative return. Now, this is the first option strategy that you're going to use in order for you to get paid. I'm not going to go into too much detail about these option strategies because I do have several videos on the channel if you want detailed explanation of how the trade is going to go. Now, that's one option strategy. The cash secured put is also known as a bullish option strategy. So if you're bullish on the stock, you should definitely consider this option strategy. For those of you that are also bullish on the stock, however, you are trading with just a couple $100 in your portfolio, then this is what you can do. You're going to leave everything as is and you're going to make a slight tweak. You're going to now change from sell, you're going to go now to buy. You're going to leave the exact same strike date. You're going to leave the put. And now you're going to be choosing the strike price below the first one you chose. So instead of 14, now you're going to go to the 13.5. Let's go ahead and click this. Let's hit continue. Let's hit review order. And this is now known as the put credit spread. The put credit spread is another income option generating strategy that's going to allow you to get paid. And remember, we're doing option strategies here that's going to allow you to get paid. The amount you're going to get paid is going to be $11. Now, once again, you're going to look at your percentage return. You're going to divide your $11 by the amount of money you need to leave as collateral. In this instance, the collateral you're going to need to leave is going to be $50. So your percentage return is going to be 22%. 22% is an extremely high, very lucrative return. But the reason why anyone would want to do this option strategy, once again, if you're only trading for a couple $100 in your portfolio, you could afford to do this option strategy because the barrier to entry is only going to be $50. Now, if you don't want to make just $11 on one trade, then feel free to scale up. Me personally, I would not be doing anything more than 2 contracts. So with 2 contracts, you're now going to be able to make $22 and your collateral is going to go up to $100. Here's a quick tip for you. Whenever you're doing option spreads, always make sure to close it before expiration. There's a reason for that. If you guys want to see why, go ahead and search your channel for options spread, and you're going to get videos there that's going to give you a detailed walkthrough of how to get into these options, also how to get out of these options, and why you need to close them before expiration. So the put credit spread, like I mentioned before, is also a bullish option strategy. So for those of you that have a different outlook on the market, you're not bullish on the market, then that's fine as well. There also are option strategies that's going to help you get paid. So let's go ahead and get into that right now. Now, right before we get into that, if you guys are getting any value in this video, now would be the perfect time for you to go ahead, like the video, subscribe to the channel to get more videos of this nature. If you guys need help with options, I do offer one-on-one coaching, and that link is going to be the first one in the description below. So if you are bearish on the stock market, here's an option strategy you could use to get you paid. So we're going to go now to sell. We're going to go to call. We're going to leave the same strike date just to keep it consistent, which is July 11th, which gives you 20 days to expiration. And now we're going to choose our strike price above the share price. We will be going with the 1650 strike price, and we're going to go ahead and click into that. Now, this one also is going to be paying you 28 cents or $28. This new option strategy that's going to allow you to get paid. Remember, we're doing strategies that's going to get you paid. This new option strategy is going to be known as the covered call option strategy. Now, in order for you to do the covered call option strategy, you first have to hit one criteria, and that criteria is very important. You're going to need to own 100 shares of the stock. Now, in order for you to get 100 shares of the stock, you will need to buy 100 shares of the stock outright at whatever price is trading. Now, let's say you do get this right now at $15 per share. The amount of money you would have spent in order to acquire 100 shares is going to be $1,500. So now you're going to check your percentage return. So although you're going to get the same $28, now your percentage return is going to be about 1.8%, which is actually still good. How did you get your 1.8%? Well, you simply divide the amount of money you're going to get, which is going to be $28. You're going to divide that by the amount you paid to acquire 100 shares, which is going to be $1,500, and that should net you around 1.8% return. The covered call option strategy is known as a bearish option strategy. So if you're of the mindset that the share price is going to continue going down or is going to start trading sideways and not go up this high, then this is one option strategy you can consider. That's most importantly going to get you paid. Now, you need to have $1,500 in order for you to do this because you need to buy 100 shares of stock. However, if you are bearish on the stock market and you only have a couple $100 in your portfolio, then this is what you can do. We're going to leave almost everything as is. The only thing we're going to change now, we're going to go to buy. We're going to leave call. We're going to leave the expiration date. This time, we're going to choose our strike price right above the previous strike price. So we're going to be going with the $17 call. Let's go ahead. We're going to click into that. We're going to hit continue. We're going to hit review order. And there you have it. So for those of you that's trading with a micro account, you only have a couple $100, then you should consider this new option strategy if you're bearish. This option strategy is the call credit spread. Once again, the call credit spread is another option strategy that's going to get you paid. That's what we're focusing on today, getting paid. The amount you will get paid is going to be $9. The barrier to entry for this option strategy is quite low. You only need about $50 in order to do this option strategy. Now, $9 may not look like much, but like I mentioned a couple of times, you simply divide the amount of money you're going to receive by the amount of money you need to leave as collateral, and that percentage is what you're going to use to make an informed decision. Now, once again, $9 is not much. So what I would do, I would scale up. Instead of doing one contract, I'll probably do two. So that way I'll now be able to collect $18. Just like the previous spread, always remember to close your option spread before expiration. I really can't stress that enough. Now, if you guys have any questions about any of the option strategies that's going to get you paid that we mentioned before, let me know in the comments below. Also, if you guys are using any of these option strategies, I would really like to know in the comments below. Now, those are a couple option strategies that's going to get you paid. Now, if you bearish on the stock market, there's strategies to get you paid. If you're bullish on the stock market, there are strategies to get you paid. However, what about if you're neutral? What about if you're new and you have no idea about direction and you don't have time to worry about that? Well, don't worry. There are strategies that's going to get you paid as well. So let's go ahead and jump right into that. So what we're going to do to make this easy, to keep the simplicity, we're going to keep this here. So we're going to start off with a call credit spread. We're going to leave it right here. Now we're going to go ahead. We're going to flip the switch to sell. We're going to go to put, and we're going to go now and we're going to add back our previous put credit spread. So the price we had at the sell put was $14. We're going to go ahead. We're going to click into that. And then we're going to go to buy and put. We're going to go with the one right below, which is the 1350. We're going to go ahead and click that. And now we have created a new option strategy. This new option strategy that's going to get you paid is going to be the Iron Condor. The Iron Condor is one of my favorite option strategies. The reason for that is that it really works out in a neutral market, or it works out on stocks that do not have high volatility. So with the Iron Condor, the barrier to entry is extremely low as well. In order for you to do this Iron Condor, the amount of collateral you would have to leave is just $50. And you stand to gain the same amount, $9. Another good thing about the Iron Condor is that the share price has to work very, very hard in order to break your parameters. So in order for you to lose this trade, SoFi needs to go below $14, or it needs to go on the top side above $16. If all that happens, then all you stand to lose again is going to be whatever money you received as credit. You're going to subtract that from your collateral, and that's the amount you stand to lose. In this case, it's going to be $41, which is not bad at all. Now, the Iron Condor is a neutral option strategy that's going to get you paid. So keeping in line with the theme of today's video, option strategies that are going to get you paid, I would strongly consider the short Iron Condor. One of the other reasons why I really like the Iron Condor is because it's a 4-leg option strategy. That makes it a very exciting option strategy. The one downside about the Iron Condor is that if you're new to options, it might be a tad difficult for you to perform an option strategy with 4 legs if you just started out. However, just start from scratch, start with the previous option strategies, and then you're simply going to work your way up. Another way to do it is to go ahead, review this video, replay the video, or search the channel for Iron Condors, and that might help. Now, there you have it, investors and future investors. No matter your outlook on the stock market, whether you're bearish, whether you're bullish, even if you're neutral on the stock market, there are option strategies out there designed to get you paid. Why would you be trading options if you're not going to get paid? So, for those of you that made it to the end of the video, you guys are the real investors and future investors. Now is your chance to go ahead, like the video, subscribe to the channel. Make sure to hit that notification bell to get an alert whenever I post more videos like these. The most important thing, however, if there's anyone out there you know struggling with a small account portfolio, the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from the regular 9 to 5, or at minimum, make some income from options in order to supplement their regular income. Now, until the next video, keep pushing your investments.